prices will start to increase as people start to buy more. And as supply excess exceeds demand, then more sellers than buyers will come in and the price will decrease, causing the stock to drop. And when the market is in equilibrium, buyers and sellers are satisfied with the current price. And this is the optimal market condition where you see consolidations or at least stocks basing, because both buyers and sellers are happy with the price and are free to buy and sell at a certain price level. So this leads to the law of supply and demand, which says when the supply of a product is high and the demand is low, prices must fall to incite buyers' interest. When the demand for a product is high and supply is low, prices must rise to represent the scarcity of that product. So that is basic supply and demand that you should understand when looking at charts and also when considering taking trades in the market. So in this diagram, you probably will see three different scenarios here. You see how supply exceeds demand. You also see when demand exceeds supply, and you also see when demand is equal supply. So you can see that on the charts here. When supply is exceeding demand, you see a downtrend. So you see right here, this is going to be the supply zone. And once you see buyers and sellers see this price right here, sellers will come in and take over and sell off the price, causing it to go lower. And by identifying a supply zone, you can also see areas of sharp decline are actually where the area is rejecting a zone. When demand is exceeding supply, you will see most likely an uptrend. And so this will tell you that buyers will come in right here with a good amount of strength and bring the price up. You will also find these in the demand zone. So right here, these two are the demand zones where people usually like to buy at a certain price. And you will also see the areas of sharp incline as a mark for demand exceeding supply. And when demand is equal to the supply, you will see a consolidation between a price area or a price zone. And so you will see a lot of sellers and the same amount of buyers and the same amount of sellers. So most likely a consolidation here. Full screen. Can you guys see my screen if I go full? Is that better?
Yeah, it's a lot better.
Okay, sounds good. So yeah, so this is where supply exceeds demand. This is where demand exceeds supply. This is where demand is equal to supply. Cool. So now we'll go into the supply zone. This is where the sellers will be in control. So you see right here in the chart, this is where the stock has multiple points of contact up here at this zone. And the reason why we use zones is to get a better feel of where the resistance, the overhead resistance is. Instead of using just a price level, we can just use a zone to accumulate the different points of contact and where the resistance is. So you can read this. And a supply zone is a price level where current holders of a market are located and are having willing sellers when price reaches that area. So you see that this area right here, a lot of sellers like to come in and sell off the stock. And then the demand zone basically is just talking about how buyers are in control. So when a stock falls too much or a price level gets too low, buyers will like to step in and buy at this price to get a good risk to reward ratio. And so the traders and investors on the sidelines that are willing to step in and buy when the prices get that low will usually buy it right here and have the stock price go up. So, Syra, did you want to go over a little bit more on these zones, and then you want to go over like the four rallies and bases? Okay. Do you want me to still share my screen?
I'll share mine. Oh, wait, you have the rally bitch rally stuff on here, right?
Mm-hmm.
Okay. So Tiffany went over what the supply and demand zones are, and now we're going to talk about how do you draw them. So it's based off of four different reasons you are gonna, 4 different things you look at to figure out where you're gonna be drawing. So I'm gonna go over this real quickly, and then I'll share a chart and draw a few zones with you guys. So there's 4 of them, right? So rally-based rally is one, meaning if you're looking at the drawing here, there's a rally, meaning the stock is going up. Then there's a base in the middle. If you can, yeah, just point at it, thanks. And then there's another rally. So your zone is the base, okay? Or the base is another word for consolidation, okay? So, and then the next one is drop-based drop. So the stock's dropping, then it's basing out. So that's a bear flag here. Then we're trying to figure out what is it going to do? It go up or down? It rally or drop? It decided to drop. So it made a base and then it dropped. So that's where you're determining where you're going to take the trade to and where your stops are going to be. The base is what helps you determine that. After that, the third one is drop-based rally. So the stock dropped, it based, and then it rallied again. So you're trying to see, are the buyers going to come in or are the sellers taking over? So the base is going to help you figure out the entry of the trade. Yes, consolidation zone. Yeah. So after that one, the last one is rally-based drop. The rally-based drop is also, you can just see it. Stock's rallying, then it's basing out and dropping. And then you guys can also read the slides that Tiffany has made for us. Thank you, Tiffany. And she has them on her Instagram too. She's going to post it there. So then you can, with rally-based drop, this is determined, it will be a bullish or bearish sentiment coming in. So then you have to be ready. That's why stop losses are so important, because if the stop goes the other way, then you have that available to you. You're going to save your principal. And also, once you keep on charting and you see charts, and if you are trading technically and you have your stop losses in place, then it's just, you just feel more comfortable as a trader of what's about to happen. I'll show you an example and some news on a stock that I am swinging here. Do you have any more slides, Tiffany, or I can show them?
No, you can show them yours. Yeah,
okay,
you
I'll
can
go
show
ahead
them
and share
yours.
my screen now.
Sounds good.
ESPN, I'll go over a little bit of like where your support is and all that. Give us let me share my screen here. Okay, let me see, do I have Facebook chart? I have Facebook charted here. I'm just gonna go over a little bit, and then I'm gonna go over another stock with you and draw some zones with you guys. So if you look here, it's so clear. This is a consolidation area. This is a consolidation area. And then there's more consolidation. So when you see a clear base, you chart that, and then as you go across, you're gonna see that so many bases are matching up. Why? Because that's what the market makers are doing. They're looking for where the bases happen to figure out what they want to do with the stock, and then us as the retailers, we're right with them trying to figure out, are we going to go short or are we going to go long? That means, are we going to buy or are we going to sell? So let me give you an example. We have been trading Facebook a lot. So since February, it's been pretty nice to us and gave us a clear direction. For example, here, we had basing over here, right? So if we were charting this during this time of February, I would be paying attention to, okay, this looks good. This is a rally from a bottom zone coming up, and then it bases out here. So now it's either going to drop or rally. So then what I do is I go down to a smaller time frame. Where was I? What is that? This is February 9th. Feb. February 9th is right here. So over here on this morning, or even over here the day before on 8th February, you could have taken this trade because it was at the bottom of the zone and it's been consolidating in the zone. So what you do is you can enter at the bottom area here, and then you look at the wicks of prior days. So for example, on the 4th or the 3rd, and then you want to go ahead and if you're entering the trade in this 265 area, you place the stop loss around the 263.77 area under the wick on February 3rd, so you don't get stopped out right away. And then you could have swung this, and then look what happened the next morning on February 9th. It just went for it, and that would be a trade from like 265 to 271. That's a really good trade. And then what you do from here is you look at, okay, it's in the zone. What are we doing after? What am I going to do with my trade after that? You can hold on to it. You can take profit, or this is a continuation of it being above the zone. You can follow it on the hourly candle and see like what's happening. Is it sticking to the trend? This looked really good. So it made a bull flag, right? And so you could have swung it again the next day. Now what did it do? It went ahead and went into this other zone up here, and it even broke the resistance on February 10th. So if then, you know, it really depends on your stop loss. Maybe you would have stopped out here, but look, you're still in profit. And then you could even have just taken the profits and waited for this to come back into the zone. And now this is another type of trade you're taking from the top of the zone. And hey, it went right back up. Does it make sense? Do you guys have any questions right now? So that's how I am looking for placing a trade here inside a chart. And for right now, Facebook is super high. So like, what is it that we're looking at right now? So you want to go back and look at the consolidations, for example. What consolidation do we see over here after this rally? And this is the basing we see right for this area. And then what do you see after that? You see that drop. So around this, let's see here, around this area, let's see, the 290 area, you want to grab. What you're going to do is you're also looking across, so see where there's more basing out. So I see more over here in the 280, where are we? Around this area. There's one basing here. Let me see here. So there's 286, 89, and then a little bit of over here. Here, let me see if it's more clear on the daily. No.
Syra, did you want to show them like a clear base? Is that what you're trying to do?
Yeah, no, I was just going to chart this top real quickly, and then we'll go. I'm going to go to Baba real quickly after this. Yeah, it's not pretty clear here because this doesn't have a lot of basing. Let me just, I was just looking. Okay, is there anything in the back? There is. So what you're gonna do is, if a stock made a high, I'm going all the way, looking back at in September and seeing where else is it touching. So I am looking at this area right here. Let me. So we already captured this 294 area. You see the basing happening here in September, then November again. There was a resistance in October, and then in this area, it's basing again. So it rallied, based, and dropped. And then going back, I'm going to grab this 301 area. And then grab the top here, 304. So that is going to help you because it's touched twice now. That's going to help you figure out, even though over here on the recently it didn't base out here, but back in September it did. So now you have an idea of where you can grab Facebook again. So it's so high right now, 312. If it does come down to like 304 area, you can grab it for a longer swing. But then you can also look at the 1 hour chart. And then if you are trading it intraday, you can look at the, you can look at the basing that's happening here, right? I have my market hour, pre-market and after hours on. So you want to see rally, and this is a base, right? And there's another rally happening here. And then now it looks like it's dropped and it's basing out here for a couple of days. So you can look at those areas too to pick up a trade. If you're gonna go ahead and just do an intraday trade to see that this might come down to like this 305 area and then you can grab it, or you wanna wait for a longer, a more, what is it? A better supply demand zone. So let me go over BABA. Let me know if you guys have questions. This one, so if you look at BABA here, you guys hold on a second. Sorry guys, I have my kids here and they were gonna go to the park and they're just asking me questions now. Okay, so for BABA, I have this part zoned out because we're pretty close to this area, and I was looking to swing it, and I did swing it. But in order to find out the zones for the bases, I went ahead on the daily to see if there's anything I'm finding. This area kind of caught my eye on the daily, and then around this area, the 220. And then I went to the 4 hours, and it was a little bit more clear to me. Around December time, we were basing in that same area. And also, we based in June and also May. So like if you look at the chart, we are going back months and months to make our chart and our zones. And why do we do that? It's because we're trying to find the strength of where the zones are. That way, when we are placing a trade, I mean, you should be comfortable that, oh, okay, you know, I did this trade and it was in the zone, so buyers or sellers are going to come in, and then we make sure we have our stops under or above the zone if we're going short or long. And then from this area, what else I saw was more basing out in the 238 area. I grabbed this zone, this area here, and then this, because I see basing here. And then when I grab that, there's other touches. So if you see, there's some more basing, rally-based rally, there's drops and basing over here too. Okay. Now, for this trade, I just want to go over this trade. What happened is I had an alert here and it went off. So this is what I do, okay? Let me go over one more thing too. There's 3 different types of trades you can take from a zone. So what you want to do is if a stock is entering the zone, you can take the trade, but then you're kind of waiting to see if it's going to bounce back or not. Or you can take a trade when it comes down under the zone or touches. Sometimes it just touches here and then gets bought up. You can have your alert over here, right? And if it goes, if you're seeing that the stock looks like it is bouncing back, you can, and you want to go long, then you can go ahead and enter it. And if you're entering a trade, like I say at 219, go ahead and look at the wick of like the previous days. Where should I place my stop? So your stop, you need to give it some wiggle room. So that my stop would be around the 217.42 area. And what will happen is that gives us a lot of time to say if it did bounce and it stays in the zone, we're not getting stopped out, and then say it stays there that day and the next day it takes off, then you will still be in the trade and it will not get stopped out. Okay, so from there, you can, it can continue. You can keep on moving your stop up and look at the resistance from previous days. And then lately it's a bear flag actually on the 4 hours. Kind of a bear flag, but it's a downtrend happening. So what happened Friday was it sold off because the news did come out of the Chinese government taking action on it. But why I liked it was because look, it barely came above this zone. Let me move it up. So it barely came above this zone and it started moving up. So I didn't take the trade here. I didn't take the trade on the second candle. Now I'm looking at the hourly because what I want to see is I want the green candles to take over the red candles. And that's basically seeing the buying volume come in. I didn't buy it here either. I went ahead and grabbed it up here to swing it, okay, to see what will happen. And I did grab end of April or May contract. I'll have to look. I did not call this out because I'm glad I didn't, because we had more news come out saying, hey, they're getting, it's bad news. That, what is it, Anthony, that they're getting charged like $3 billion. Anyways, so I feel like that news is all built in because they've been going through this since last year with their CEO and all that mess that they've been dealing with. Anyway, so this is a way that I take the trade. I do see a lot of red on the hourly, but then I did see more green coming in. Even though the green hasn't taken over this red, this is the trade that I'm taking because it bounced off of a zone. And then, my stop I would actually watch it to see what it's going to do around the 218 area. Is it still going to hold or not? Now, yes, that's a huge gap. But then if you're swinging, like this helps with your swings. If you're swinging, you have to give it wiggle room to see if it's going to play out for you. And sometimes, a lot of the times, it's not even going to come down here. It's going to just maybe come into zone a little bit and then rally up for you. For example, if you want to go short, you think that, okay, this is like really bad news and this might, on Monday, it starts going into the zone and it's at 220 and you see there's more red candles on the hourly and you go ahead and enter the zone, you are going to go ahead and make sure your stop is above the zone now, okay? Which you might want to keep it at like 221. Let me look at the 4 hour. You want to look and see where did the buyers or sellers. Yeah, the 221.72 area looks good too. Maybe have your stop if you think it's going to go ahead and sell off. So you're giving yourself some wiggle room on that in that area too. Does it all make sense? Do you guys have any questions? Oh, it is. I believe it is getting recorded, right, Twixie? Okay, so this is what I'm using for calling out stuff too. I really like the zones, and lately we've been using the volume profile. This is the one I've been using, and this helps us figure out where there's a lot of volume. So if you look in this area, this is showing that there's a lot of strength here, and this is the line of POC, which shows us where there's a lot of buyers and sellers in this area. So it is below it right now, and we will see how this plays out. It might not even play out. But the thing is, like, I feel comfortable taking a trade like this because I know it's right above a zone, and I know there were buyers here before. There are sellers here too, but you know, it hasn't gone below this area since December, and it's held up. So if you look here, back in December, it was at 210 where it held up. Then it's 219. Then it tested 217 again, and it did test lower on Friday, but it's holding up. So I'll see how it plays out, and I'll let you guys know. But this is another indicator that we've been using. Kind of is funky at times, but this one, wait, which one was the one you found? Is it under volume range, Tiff? I forget. Anthony, which one was the one Tiffany used? Mine's a volume profile, but I'm working on looking over the one that, wait a minute, volume.
Did you say volume profile?
Yeah, which one is the one that pops up under TradingView? What do you look it up as? Volume range?
No. So look at the left side tab right there. Right below public library is volume profile. No,
Where?
indicators in the little box right there. Yeah, no, volume profile right below it. There you go.
God. Visible range is what you use.
Yes,
Yeah,
visible range.
You can look it up on their help, and there's a link, and we can post that too. And you can read about it and see what it says, and it talks about everything in here, which is pretty cool. This is a really good tool. I really like using like volume and zones to tell me what's happening, and I feel like these two are really important for simple trading, and this is basically what the market makers are looking out for too. So I feel like this would help all of you guys. And you can use the smoke and the volume profile to day trade too.
Yeah, so with the volume profile, you guys, the visible range, when you change the time frame, it also tells you the different volume profile. So for example, it would be different if you looked at the volume profile on the 1 hour compared to the 5 minutes, and also compared to the 1 day. So they are different, and also the POC, the point of control, will be different as well, because the different time frames show a different volume value on longer time frames versus the shorter time frames. So that's why you see the POC moving every time. And the POC is something to keep in mind when trading, because that is where the most volume comes in for both buyers and sellers. So that is a very important zone, or at least a price level, to keep in mind when you are day trading. Usually, if it is approaching a POC from the upside, so if it is approaching it below the POC and then going to go up to touch the POC, that is something to keep in mind as well. So yeah, we will go over volume profile a little bit more in depth, but there should be a link for TradingView for volume profile. I think you have that.
Yeah, I can post it in the education later.
Yeah.
Do you guys have any questions? Tiffany, did you want to go over anything else?
No, basically, like, you covered everything. Yeah, with the zones and stuff. This is really important for you guys to keep in mind when you're doing support and resistance levels too, because zones can honestly up your game instead of having one price level. So For example, if you have a fib level, you can always have a zone and double check with that. So you probably have seen on me and Syra's charts that we both use zones, or at least we label them so supplier demand zones, and you guys should be looking specifically at these price levels for this stock. And so those are really good to keep in mind when you are trading, because if it is approaching a zone, you would know when to buy or sell, or you would know what the market sentiment would possibly be if it was approaching one of these zones. So does anybody have any questions for us? Anything that you wanted to clarify? Syra just put the volume profile guide in trading school chat room. Resolve a lot of my entry exit issues. Yes. This really helps with FOMO a lot. If you are FOMOing a stock, you can just go to the longer time frame, look at the zone, say, okay, if it is approaching a supply zone, I probably shouldn't enter unless it breaks that supply zone. And then if you see a demand zone and you want to potentially play some upside to it, you can also do that as well. So zones are really good when you want to determine your entries and exits, along with using the SPICE algo for confirmation. Zones are very, very helpful.
And Don, that's really good. Every trader needs to know, like, you don't want to get into a trade and have that anxiety of like, oh, where is it going to go? What is going to happen with it? That's why you need to be looking at your charts to see where the supply and the demand is in order for you to be more confident in taking a trade that you have taken, and because you know the whys of why you've taken that trade. And that's why we're doing these sessions, so you guys can get into the depths of it, and then using SPICE Algo, you guys can make those better decisions to figure out if a trade's going to go your way or not. And then also have your stop in place for, to make sure you're preserving your capital. And if the trade doesn't really go your way, and it also has to do with, the market momentum and all that at times. Then you can look at the shorter, if it's breaking a 52-week high, then you're like Facebook did, right? Then, like I said, you can go into the shorter time frames. This is an hourly time frame, and you can make these zones, because they've only touched in a small time frame. I mean, like, what I mean by that is, like, it's within a period of a week or even like a couple of weeks. This is the area that it's touched. So this does have a consolidation here, but at the same time, you should make sure you understand that it's in an area where there's it's not a strong supply demand area. So you can, if you did enter this trade at this was where you had entered it at 294 and you're still holding on to it and just keeping your stop in the green, and you didn't get stopped out in this area, you can still make sure that you're in a trade by just moving your stops up and moving it smartly, like under zone, so it just still continues to pay you. But you can use these areas. You can go to the 1 hour chart this, and then go to the 15-minute and find more consolidation areas, and then go on the 5-minute and trade it. So you can use zones for swing trading or positional trading, which is longer than swing trading, or you can also go do smaller time frames for like scalping and stuff. But I do also scalp from like this area. So if I saw Facebook at 301 and it shot up to 304, this is like perfect. You can enter at 304, and if it continues all the way up here, you just made a lot of money, and you can stop out after it didn't break up top. Trailing stop limits, we can look at it. Tiffany, is there any education for trailing stop limits? There may be. If not, we can find something for you guys.
For TD Ameritrade, TOS, or what? I'm pretty sure
It's
you can look it
trading
up, but
sorry.
I don't know if we have any in trading education. We'll probably look into putting that there, but we will see.
Yeah,
Yeah.
TO has a lot of good education on their website. You can go ahead and search it, and it will. They have like a lot of like articles on how to do everything and a lot of videos, so you can learn it through your whatever platform you have. If you have a question on anything based on um, learning, you can just type it in, and it'll pop up a lot of videos. Like I have Fidelity, and they have a lot of education, and they also offer a lot of classes too. Okay, and what do you? My Wi-Fi is bad. Do you enter a trade as the wick or candle body bounces off the base zone?
I wait till candle close, but I don't know about you, Syra, because
Candle
usually
close at what
zone,
time frame are you looking at the 5?
both the longer time frames and the shorter time frames. So my zones, like for Netflix, for example, I think it closed above that zone, which is good for continuation. Let's see. Go on.
What time frame?
Okay, yeah, basically that zone right there that Netflix is in, I would wait for a candle close or at least a confirmation of continuation because it is still in that zone. So probably above 550,
7,
what is it?
right?
Like, yeah,
But the close.
557, 558ish. I would wait to enter in long after it's closed above that because even if it is in a zone, it could still come back down. Sellers could still step in and bring the price down even more. And you can see that the POC is at what, 510. So the volume is starting to get a little bit lower too as the price starts to go up. And so even if it is in um, a seller prone area, I would be careful about entering in like if they're wicks. But I mean, it's up to you. I like to wait until candle close just because it gives me assurance that it will not try to reverse or try to have a fake breakout. Correct. Yes.
And I'm also looking at Netflix. Netflix has earnings next week. So we've been watching it to break the 557 area. We're also going to have it on watch for next week. And it is above the POC on the 15-minute if you look at that. And lately, all it's been doing is um, basing out and rallying and then, pulling back a little bit, but continuing its continuing its rally. And so the last couple of days, if you look at the 15 minutes, this is also like, it's basing out here. And so it based, it rallied, and then it dropped a little bit, and then it's basing and rallying. And so we'll see what happens with that. That's why if it 557, like Tiffany's saying, it's a good area to enter. That's one of the trades you can take from the bottom of the zone and continue. Hopefully, it continues our bases and then rallies again for us. So that would be a really good one to look at. There's a lot of volume in that area on a 15-minute. That looks good. Yeah, Tiffany. So I also look at the hourly because it's just what the rule is. Something I've learned from another mentor. His name's Don Fran. That's where I learned my zones. But one of the rules he has told me and us is that you want to make sure you don't get into a trade when it's all red. It's so red and it's in the zone. Like over here, for example, Netflix right here. It's red, it's in a zone, and you're all like, oh, it's in a zone, let's get in. hold on. It's look what happened. Did it go back up for you, or this was a good short? And you could have shorted it into this other zone, and then it pulled back. And then when it showed you some sign of a turnaround over here, is when you want to take the trade, because you want to see if it's going to test the zone again. So it tested the 516. Okay, maybe you would have gone in, but then it tested again at 514 and then went up. And then these candles, you have to look at the candles to tell you, okay, are the buyers coming in or the sellers? So the candle bodies are important for you to understand what's going to happen next. So the red candle totally overtook all the gains of the green. So you should have like moved your stop up, and so your exit will be in a gain. So that's why learning your candles is a good idea too, so you know if the buyers are taking over or the sellers. All right, I think we're gonna wrap it up now. Thanks for joining us, everyone, and you guys have a great weekend.